Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan with some high probability action areas and price objectives for the trading week ahead. Now, before we jump into the technical picture, as always, want to keep abreast of the macro drivers and the market narratives that are helping to drive price action. Obviously, the payrolls data came in hotter than expected on Friday, which led to the 30-year bond in the US printing 5% at one point. We're trading just below there this morning, with the 10-year also just below 4.8%. Now, as I referenced, any move up to that 5% level is likely to weigh on risk sentiment and hence be a drag on markets. So I want to keep a close eye on those bond yields as we head into the week. And from a macro perspective, also want to keep an eye on the wires with respect to developments on the tariff side of things, with Trump's inauguration next week. This is the final week before he is inaugurated, and we could see some tape bombs with respect to potential tariff developments throughout this week. We also are getting some positive news or potential positive news out of the Israel-Hamas situation with peace talks developing. In terms of economic indicators this week, it's the key driver on the US side of things is going to be CPI and retail sales. We get the CPI, consumer inflation report, on Wednesday, ahead of the Fed's next meeting on January the 29th. And certainly this is going to be particularly interesting given the recent bond market volatility that we've seen. Economists anticipate a slowdown in the month-on-month growth for both headline and core CPI to 0.2% down from the 0.3% in November. Ahead of that, we also get on Tuesday the PPI reports, which is a complementary measure of inflation, expected to show a 0.3% month-over-month growth, slightly easing off that 0.4% recorded in November. And then retail sales figures are slated for Thursday. Those will offer insight into consumer strength with predictions of a 0.3% month-over-month growth, again, pulling back from November's 0.7%. We also get industrial production rounding out the week on Friday, expected to show a milder 0.1% month-over-month recovery following a contraction seen in November at negative 0.1%. And then on the monetary policy side of things, a number of Fed officials will be speaking throughout the week, so keep an eye on the wires for that. And then we kick off Q4 earnings with corporate earnings season beginning in earnest on Wednesday, when we get the big US banks, JP Morgan notably, release their earnings on Wednesday. And we will also hear from one of the tech darlings, TSMC, who are set to announce earnings on Thursday. So that's where we are in terms of the narrative and the macro drivers. Let's check in with the technical setup. So last week's price action was a technical outside week to the downside, a bearish development. The weekly volume weighted average price now sits at 59.75. Keep that level in mind. It's going to be key this week if bulls are going to try and recover ground here. 59.75 is the 5-period weighted volume average price for the last 5 weeks of trade. So 59.75 is a level to keep on your charts. In terms of the implied move for the week, given options pricing, we have projected range support coming in at 57.45. We're looking at a potential 119-point move to the upside or the downside following the open in Asia last night. So the support comes in at 59.74, which is interesting because we actually have trend line, projected trend channel support coming in there. And it also represents the 38.2% retracement from the lows that we saw back in August of last year. So there's a bit of confluence developing there. It's also a 131 extension from our 61.10 swing high. And so I'll be keeping an eye on that level to the downside. On the upside, 59.83 is where projected range resistance would come in, and that obviously notably is just above that 59.75 weekly volume weighted average price. So there's some key levels to keep in mind in terms of the weekly range and the price objectives as registered by implied volatility for the week. You can see my current positions and stops in place. I've been locking in profits on shorts. I've taken a tentative long this morning against our 58.24 target from last week, and we will see how that develops. But you can pause the video here and review my positions if that's of interest to you. But moving just before we check into the weekly plan, I'd like to update the seasonal scenario. I'm using a 25-year sample here, and I'm looking at post-election years. Again, note the potential for weakness into the back end of this week before the inauguration, which generally in post-election years sees a bump into the early to middle part of February before seeing another decline or slide into a potential yearly low, which we could see develop in March, but more on that to follow. So let's take a look at the weekly plan and see where we are. So as I say, I was watching for the test into that 58.20 this morning, which was our quality objective versus the swing structure, which we have got. We have seen some buying there, and we'll see if that sticks now. Looking at the daily time frame, first of all, in terms of my bull bear zone, I'm looking at 58.64 to 74 as the initial resistance area. I'd want to see price clear that 58.75 and see acceptance above there to suggest that we do have a tradable low in place, and then we'll be targeting weekly, well, firstly, daily range resistance, which comes in at 59.03. Noteworthy, I am using 59.05 to 59.15 as my weekly bull bear zone. If we can get through there, then we're going to be targeting that range resistance up into 59.70s, 59.80s, which now coincides with the projected trend channel resistance. The alternative scenario is that we trade up into that daily bull bear zone, we find rejection, note it coincides with the midpoint of the projected channel, and we get that push down into our 57.30, 57.40 area, where once again I would be looking at opportunities to engage on the long side. Certainly if we test into that area later in the week, Thursday, Friday, for instance, and that could give a nice setup then heading into a pop for the inauguration with the same upside objectives in mind. Any loss of the 57 handle would be a meaningfully bearish development. And certainly then if we move out to the higher time frames, we'd be starting to look at 56.50 as the next downside objective if we fail to hold support there. But for now, my focus is on looking for support to develop into the latter part of this week, and then we're going to look to trade a potential pop into the inauguration. Obviously, cognizant of those key data releases on Wednesday, specifically with that CPI, we can see some volatility around there. So not marrying any positions early in the week here, looking for a mid to latter week setup where we might find a local low to trade. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.